Ladies and gentlemen, good day and welcome to the Q1 FY24 earnings conference call of Berger Paints India Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Abhijit Roy, Managing Director and CEO, Mr. Kaushik Ghosh, Vice President and CFO, and Mr. Sujyoti Mukherjee, Vice President, Finance and Account. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Nitin Gupta from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you, Carol. Good evening, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to the management for opening remarks. Over to you, gentlemen.
Thank you, Nitin. Good evening, ladies and gentlemen. A very warm welcome to Berger Paints India Limited earnings call for Q1 FY24. As has already been mentioned, we have with us today Mr. Abhijit Roy, our MD and CEO, and Mr. Kaushik Ghosh, Vice President and CFO. The management presentation on the performance has already been circulated to the exchanges and uploaded in the company's website for your information. So without spending any more time, I will now hand over to Mr. Roy for his comment, followed by your questions. Over to Mr. Roy.
Thank you, Sujyoti, and a very warm welcome to all of you. It's been a good quarter for us in spite of a very strong base that we had. We managed to have double-digit volume and value growth. Value growth for the standalone was 10.1%, operating profit growth 37.5%, and PAT growth 39.2%. If we look at the volume and the value growth picture for a 2-year CAGR, 3-year and 5-year, we can see for this year, volume growth was 12.7% overall, with the decorative growth rate was higher at about 14% odd. In terms of the 2 years compounded growth rate, it was 25.5% in volume terms, 3-year 39.6%, and a 5-year compounded growth rate in volume is 18.5%. If we look at value sales growth for this year, it's 10.1%, 2 years compounded is 30.1%, 3 years is 49.1%, and 5 years is 18.9%. So if you look at the 5-year growth rate, more or less this is at par at 18.5 and 18.9%. The last 2 years and the 3 years growth rate, if you look, they are higher in value terms, largely because of the price increases that we took in this interim period. Now going to the next issue, and in terms of our performance for this quarter, we had the highest gain in market share in the industry in Q1, and we had the highest profitability growth, which is the operating profit growth in Q1 of this year in the industry, in the listed space, the results of which have been announced already by all the other players. And therefore we can claim with certainty that, the highest gain in market share and the highest gain in operating profitability growth rate-wise is there for us in Q1 for this year. So that's, something which we are happy about. If we look at the market share, it's been moving up quarter on quarter and year on year, almost every year from 2020 onward. And we have shared this with you, it moved up from 18.3 to 18.6, then on to 19, then on to 19.3, and now this quarter on to 20.2, which is an increment of 0.9%. Now this is based on the announcements of results by all the listed companies. This takes into account Berger's standalone business plus Sabu Coatings and STP, which operates out of India. And so this is added on to this standalone results, and we look at the Indian operation. And if you look at that, this is where we stand, which is 20.2% in terms of market share. If you look at only standalone also, there has been an increase by about 0.9%, which is the same as you see in the India operation. If you look at the decorative business on sustained, if you just analyze only the decorative, it's been a fairly good growth rate in quarter one. As I said, healthy double-digit volume growth and a value growth which is also in double digits, higher than the overall growth rate. So the industrial divisions grew at a slower pace than decorative in quarter one for us. Waterproofing business continued to show strong growth. Both urban and rural markets showed improvements in the quarter. We added about 1,300 plus color bank machines in this particular quarter. We introduced a few interesting new products. One of them was the WeatherCoat Anti-Dust Cool. Our WeatherCoat Anti-Dust is a leading product in that particular segment. And we introduced a variant called Anti-Dust Cool, which not only protects from dust but also keeps the house cool. And in areas where it is predominantly remains hot and slightly dusty, this product has started doing quite well. Another product which we introduced is in the luxury interior emulsion space called Silk Glamour Dazzle. This is a high sheen product which is much in demand in the eastern part of the country where we are reasonably very strong. And this was a product which was demanded in the marketplace because there is a affinity for very strong sheen finishes. And we introduced this product and it has been a reasonably good success so far in the East. We also introduced a few products in the waterproofing range. For the roof coatings, we have PU Elasto Seal, which is a solvent-based polyurethane with 600% plus elongation. And then we have polyurea, brush applied and spray applied, which we have introduced in the segment of waterproofing. We also completed the range in the tile adhesive range, and introduced a few products there. Two of them are epoxy tile grout. We are soon going to launch PU adhesive for stone finishes as well. So this will, we are going to introducing slowly one or two products every quarter to complete the range in the tile and stone adhesive range and add to the waterproofing and construction chemical space and fill up all the gaps that are there. On the industrial side, in protective coatings and general industrial business, continued steady growth for the quarter, though lower than that of decorative as I mentioned. But we had good price realization and improved the profitability in these businesses. Automotive business had a modest growth on account of subdued growth in the two-wheeler industry. So we are predominantly present in two-wheelers and commercial vehicles and tractors. Therefore, our growth rate in the automotive category was modest in this quarter. Powder coatings business line continued to degrow a little bit in this quarter due to high base effect and downturn in the fan industry. However, it has already turned around in the second quarter. In July, it registered double-digit growth, and we expect the business to turn around in quarter 2, financial year 24. The gross margin, as we see it, we had indicated last time that the gross margin had jumped up from 33.8 to 39.6, and we are maintaining it at those levels. And we had indicated that we will be hovering around these levels only. Between 38 and 40 is what we had indicated. And we have held on to that 39.4%. As a result of that, and last time also, I had also indicated that the EBITDA growth rate should have been higher, but due to some one-off expenses like the Sandila factory kicking off, where we had massive overhead, and some advertising expense which we had taken as a one-off. This time, such expenses were not there, and therefore, the operating profit ratio improved to 18.8%, which is, a fairly decent improvement from earlier levels. In terms of our debt position, it has improved considerably. And on the, if you look at the net debt situation, it has come down to 243 crores. On a consolidated basis, it is even lower. But, this figure is going to become net debt will become zero nearly by the end of the year. On a consolidated, if you look at the Concal results, we grew by 9.8% on the revenue front. The operating profit growth was 37.5% and PAT growth was 39.9%. If you look at all the subsidiaries that we had and the performances of them, Bolix Poland had a strong quarter of both top line and profit improvement. The bases were weak, and also it had a very good performance in the UK business. Overall, therefore, the growth rate was quite robust. Company's overseas subsidiary BJ and Nepal had another quarter of degrowth in top line and profitability. This is largely a country effect. Almost every company there is suffering because of issues related to the general economic situation there. Very high inflation, very high interest cost, and there was a slowdown in the market, but things are looking up now and slowly improving. Company's subsidiary SPP showed marginal top line growth due to a high base, and it had some issues related to one of the factories where one of the lines had to be stalled. So their OEM supplies got impacted a little bit. However, there was a strong double-digit profitability growth aided by improvement in gross margin due to softening of raw material prices. We expect double-digit value growth of SPP in Q2 financial year 24. As far as Sabu Coatings is concerned, we had a marginal degrowth in the top line due to a high base and adverse impact from the fan segment and the export segment. However, profitability recorded robust growth on the back of softening RM prices. We expect double-digit value growth in this business line as well in Q2 of financial year 24. Company's joint venture Berger Nippon Paint Automotive Coating had a very robust quarter of top line and profitability growth, aided by uptick in passenger car and SUV sector. This, of course, we don't count this, into our results as it is. We have only 49% of this, so it doesn't come in the revenue at all, but it has a 49% impact in the profitability figure. Company's joint venture Berger Becker Coatings had a degrowth in both top line and profitability in the quarter on account of capacity constraints due to fire in one of its manufacturing facilities in Goa in Q4 of financial year 23. This also, the top line doesn't come, only the bottom line gets added up as we have a 49% share in the JV. Road to sustainability is very important. ESG is gaining importance. We have also focused heavily onto this area. Project Jal, where we saved 2.88 lakh liters of water. In terms of solar power, we actually have now 66 lakh kilowatt hour of solar power capacity, which is a 35% increase from what we had in last year. We also had a reduction of HPC in financial year 23 against financial year 22 of 4.34%. If you look at the carbon footprint reduction, Year on year, we have been improving, and last year we had 19,635 metric ton of a CO2 reduction which happened last year. Company expects to end the year with double-digit revenue growth as the demand outlook remains good in view of positive monsoon progress, infrastructure spend, and extended festive season. And profitability, we expect it to sustain at current levels. It's the raw materials which we expect to remain at these levels, sustain at this point, and probably the profitability also will be at similar levels. Though we have always said that it will hover between 16 to 18%. Currently, it's ahead of 18 at 18.8. So we should be around this figure if nothing untoward happens. That's all that I had to say for quarter one results. I'm open to receive whatever questions you have, and that's it from my side.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks and congrats on a very good set of numbers. My first question is on some of the one-offs which you had in previous quarter. If you could update what is the status on that. For example, from Andhra government, 10% of the receivables were still left. What is the status on that? Second is definitely there was a fire losses in one of the factories and you had provided already 25 crores and insurance claims, etc. What is the status on that? So those were the quick, and there was one more provision. So if you could update on all three.
Thank you, Abneesh. And so, yes, so the fire loss that you mentioned, we have already applied for insurance. It's normal process. We should be able to get it in the next 3 to 4 months. And once it comes back, then, we'll obviously reverse the provisions that we have made earlier. As far as the Andhra Pradesh government payment is concerned, we have provided for it. Some part of it, it's still pending. A small portion for the school project which we had done is pending, and that has to come through. We had to submit certain documents which we have just completed about 4 days back. Now they will go through the process. In a month's time, we are expecting that this AP school project balance amount of money out of about 300 plus crores. We've got almost 278 or 280 crores and balance 22 crores is left, which has to be received by us and which we should receive in the next few. I would say 1 month maximum time frame is what I would place it at, and we should get that amount.
Sure. My last question is on the volume growth. So another paint company which also saw very strong numbers. It's a smaller company. They said that in July, the earlier trajectory what they had seen, strong volume growth that has sustained in July month also. Plus, all paint companies are saying because of the festival season which is delayed this year, which gives a reprieve between the monsoon ending and the festival season. That's supposed to be good, but a lot of that benefit will come in Q3 rather than Q2. But on an overall basis, it will be better. So wanted to understand July month and festival season. How are you looking at it?
So, Abneesh, a lot of these things, depend on the basis of different companies. I won't get into the detailing of it. If you study, you will find that, sometimes the bases are weak and therefore you suddenly have a bigger growth rate in certain months or quarters. But overall, consistently, if you look at it, you should look at from the market share perspective. Is there a gain or a loss of that particular company or companies concerned in particular quarter. So that will give a better indication of things. The second part of it is, related to what will happen, in the third quarter or in the second quarter. Yes, Diwali is delayed this year. So the chances are that, we will have a much better third quarter. Again, the third quarter base is on the lower side because last year most companies haven't done well. So on that weak base, relatively weak base, there will be better growth rate in the third quarter, a much more robust growth rate should be there, especially if the Diwali is getting delayed. So that situation is likely to arise in the third quarter. So the second quarter, because of the monsoon being there a little bit impacting in July quite a lot, many of the companies wouldn't have had very strong growth rates in July. Exceptions are there always. Depends, as I said, on the basis. And then, second quarter will be moderate for most companies. The third quarter will be far more robust as far as most of the companies in the industry is concerned.
Sure, thanks. That's all from me. Thank you.
Thank you, Avnish.
Thank you. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Sir, I had a few questions. First, sir, I wanted to get an update on the level of regional competition and whether the benign input cost has resulted in that kind of increasing.
Right. So regional competition, had reduced a little bit, if you recall, in the COVID period. And people used to ask, earlier also that, whether you think, is this, you are gaining out of them and, is this going to sustain? And I had always said that, there is a possibility of them gaining once the prices start, reversing. And so some amount of, the stronger players have remained and they have come back. The weaker players, of course, they gave up and they're as good as gone. So therefore, some amount of regional bounce back is there, both in the industrial side and also in the decorative side, but not very significant, I would say.
Okay, so it would not be concerning enough to kind of consider price reduction or passing it on. Because I was essentially trying to understand, is there a reason
to
look at price?
I don't think so.
Now?
I don't think that is required at this stage. Though, I think, you must remember that though the prices come down of raw material, this is a very competitive industry. The rebates and discounts tend to move upwards in such a situation because every company knows that the margins are there to play around. And therefore, ultimately, if you reduce the price, you will tend to reduce also the price, discounting and the rebating to balance out to some extent. And therefore, I don't see this price drop happening immediately. Though to a large extent, it depends on the leader and how, it takes it up in the near future.
Okay, sir. But essentially, demand is strong. Competition is not a concern. Then the other part is the last part is the uncertainty. Okay, I hear you.
Yes.
The second bit, sir, I wanted to understand is the Sandila plant. Now, is it fair to say that this quarter represents almost the entire cost and additions, or by when do you see the costs, whether it is in terms of higher employee cost, depreciation, and even the benefits in terms of lower freight cost to start flowing through from the Sandila plant? Or is it largely reflected? I was just trying to understand how should we build it in as we go forward, sir.
So it's still in a work in progress, not fully operational that way. It's not, operating efficiency is still needs some amount of improvement. We have moved up somewhat. So on a scale of 1 to 10, I would say we are somewhere around 5, 6, at those levels. It can go up further in terms of improvement. As the season comes off, we are going to see significant improvement there in the Sandila plant.
And sir, the depreciation is largely done, right? The depreciation cost of that unit is broadly done, or there might...
Yes, that's there. That is done.
That is done. So it's only going to be any operational benefit as they kind of scale up. We will only see benefits
That's
from
right.
here on because...
You are right. That's right.
Okay, sir. And sir, lastly was on the ad spend to sales. It's just a bookkeeping, if you could give us a sense on where we are in first quarter and how do we see it behaving going forward, or what is our target internally for FY24 and probably a steady state?
So we have more or less maintained the ad spend to sales ratio at wherever we were last year, approximately at similar levels we are. And then we see this trend continuing going forward. We may accelerate a little bit from end of third quarter, depending on how the prices of raw material are. We may want to spend in the third and the fourth quarter slightly more than what we are doing in the first and the second quarter.
Okay, but that, sir, 3.3 was the number last year, if I'm
That's
correct.
Right.
3% or so. But the steady state or prior period was more like, earlier years you've almost gone to 4-5. So you think the number should be more in the 3 level on a yearly basis?
So it will be around 3.5 to 4%, towards the end of the year. At current levels, it is at the 3.5% level, approximately.
Okay, sir. I'll come back in the queue for the other questions. Thank you very much, sir.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, good evening, Abhijit. Thanks for the opportunity and congratulations.
Good evening.
So, I was just reading and I was more curious. At 20.2% market share, this is all India. What would be the market share where our core market is, which is North? Will be similar range would have gained or will be higher?
Yeah, so we gained across the board actually. Obviously the market share to begin with is higher in the north and the east, but the gains have been higher in east. Possibly we would have gained definitely slightly more. Also in the north the gains has been more or less similar to the national average. The west gain would have been slightly on the higher side.
Okay. So one follow-up here. Largely, this market share gain, we were under-indexed into the exterior, and we have seen a lot of product launches. So that's where we have gained, or pure play, the decorative inside 4 walls. That is the segment where we have gained the market share.
So more of the gain, it's a combination of all the factors, Shirish, but it's also a distribution gain which is happening in the west and a little bit in the south as well, where we had said that we are relatively weak and we will focus on expanding on the network. That there is an opportunity there for further expansion, and that growth will continue.
Okay. My second question is on the decorative slide. You mentioned that there are new product innovation which has happened. So generally, how much time a new product gets settled? A year or so you get a full revenue, or it takes little longer time to get the distribution gain and then it starts showing? And what are the gross margins you have the benchmark inside the company that any new product you will launch will have some gross margin impact on?
Yeah, so it's in 2 parts. You mentioned how long does it take. Normally, if it is a product which is in good demand in the market, or we have read the demand situation correctly, then it should start reflecting in 4 to 5 months time frame. It doesn't take that long to impact on the ground. It is a slow phased rollout, and therefore that much of time is required for the rollout to happen. If we find that in the initial markets we see good traction, we roll out much faster, and therefore it should take, as I said, 4 to 5 months. If we find that we need to tweak the product a little bit, then it may get delayed a little bit in that sense. As far as the gross margin is concerned, it depends on the product category in which the product is being introduced. More or less, any new product which is introduced in a particular category, say it is luxury emulsion. then it will be close to the luxury emulsion and slightly higher or around those levels of the existing luxury emulsion product. However, if we produce a very economy range product, then the margins will also be correspondingly similar to that type of a product category.
Okay. My last question on the outlook slide, you said that you are expecting a double-digit revenue growth. Directionally, what we read from the market and other players, that price element is going to be sub-minimal. So, I mean, another one quarter you will have, by November, you will have price anniversarization. So, in that context, do you think the volatility in the raw material prices is there and we will still build double-digit volume, double-digit revenue growth in terms of value? And maybe if you can spell out what is the volume growth targets you are setting for FY24?
So as I said, Shirish, our value growth in the first quarter has been double digit. Volume growth also has been double digit. First quarter also was quite tough on a very large base. We had a very big base of last year. In spite of that, we were able to grow in double digit. As I said, in the third quarter, we see a possibility of a stronger growth rate. Second quarter will be not, as strong as the third quarter. It will probably be similar to the first quarter. Therefore, overall, we see that, we should be able to comfortably, deliver the double-digit growth rate by the end of the year.
Okay. Thank you and all the best, sir.
Thank you.
Thank
The
you.
next question is from the line of Keshav Bagri from VT Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, you are.
So my question is on margins actually. So is it fair to assume that margins have topped out? And I think I have two reasons to support this. One is, I think crude will take away the sheen, and if it doesn't take away the sheen, then maybe you will have to increase your rebates and all. And plus, the competition is also coming from Q4. So what is your outlook on this?
So, we have always maintained that, the margins will be around these levels, right? Whether it is topped out, whether it can further improve, somewhat, or whether it will remain at these levels is difficult to say at this stage. We are also doing we're taking a lot of initiatives from our side in terms of further improving cost efficiency, both in terms of formulation efficiency, also in terms of raw material buying efficiency, which should reflect in some improvement in the margin. Now, if that can be neutralized or gets neutralized by increasing competition, that may happen. And therefore, if that happens, then we will be restored back to the current levels of margin. Otherwise, we would have possibly improved a little bit from current levels.
Okay. So my second question would be, like, if we look at the leader, then they are focusing more, like they want to be a full-blown home improvement company. So we are also into decorative industrial paints, exterior paints, plus we are also into the tile segment, I mean. So are we also planning to go into some deeper or some agencies?
No, we are very clear in our head that, we have no intention, and I have repeated this, that we are not getting into other categories. We are going to remain in paint and waterproofing segment. In that waterproofing and construction chemical space are the tile adhesives, which is, very, very similar products like, cement-based, cementitious adhesives or epoxy adhesives, which is like paint only, So we are going to remain in this space only. We are not going to move into, say, home decor or, furniture or furnishings, etc. We will remain concentrated around the space of paint, waterproofing and construction chemicals.
Okay. Thank you, sir. That is it from my side.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, so thanks for the opportunity. So just wanted to understand about market share, the 20.2% market share. Is it in paints or it includes all the categories like paints, primer, putty, and waterproofing, etc.? or if you can specify the market shares in each of the categories separately, that will be good. Means.
So Anirudh, this is based on published results. I do not have results of other companies of paint, primer, putty, etc. So it is not possible for me to be able to project market share based on that. What we have done is we have taken the standalone results of all the companies. To the standalone results, we have added our STP and Sabu value, which is basically in India, and therefore we call it the India operation. We have added in case of Indigo the recent purchase of Apple Chemie and that turnover as well, and then have seen where we stand in terms of market share. There, if we see it, it is at 20.2% for us, and an increase of 0.9% has happened in this particular quarter. But I can't tell you what the market share of individual categories are, because there is no one is publishing that data, and so how do I tell you anything at all?
No, sure, sir. Understood. Thanks for the clarification. So second is now projects is becoming a major segment, and we see a definite strategy from almost all the paint companies. So what is Berger's strategy in case of projects business, and roughly how do we see it panning out over a period of next 2 to 3 years?
So we have always been in the project business, present there, for long years now, and we have a fairly decent size of operation there in the project segment. It is growing, it keeps growing and ebbing, depending on the builder segment and how it moves. For the last 1.5, 2 years, it's been growing. In the COVID period, it had sunk a little bit. So it has its ebbs and troughs, and peaks. But as of now, it is on the growth path, doing well, doing slightly better possibly than retail. And we think that this trend might continue a little bit into the future. This segment has, it is profitability is on the lower side compared to retail, but value sales growth has been slightly higher than that of retail in the last 1.5 to 2 years.
Okay, sir. Thanks. And last question. The trade discounts have increased, but what would be the indicative quantum in industry and as well as for our company also? So let's say if the trade discount was X% in Q1 FY23, so what it would be now? Maybe X plus 5% or how much it would have gone? Yeah, that's the question. Thanks for it.
So it depends on product category wise. It is not a uniform thing. It depends on my mix compared to someone else's mix. So what has happened is in certain categories of products, the discounting has increased, whereas in certain other categories, it hasn't increased so much. So overall impact will depend on the product mix. For example, in enamels, the discounts went up substantially, whereas, in some of the other luxury emulsion products, it hasn't moved, so much at all. So therefore, it will depend on the proportion of these products to the overall mix. And then the situation changes with quarter on quarter. So in this quarter, enamel plays a very critical role because this is a wholesale period. So typically, people tend to rebate excessively in this category, whereas in the next quarter, it will be more of an emulsion play. So it will depend and keep changing, but overall, the discounting has gone up a little bit marginally.
Okay. Sure, sir. That's very helpful. Thank you.
Okay. Thanks.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity and congrats on good set of numbers, and also thanks for very detailed initial presentation and remarks. A couple of questions from my side. So, when we look at FMCG companies' numbers and their commentary, it has been subdued and the consumer sentiment has been very, very tepid. and on retail side, it has been very emphatically very tepid. So between those two buckets, when we see our numbers, and then I'm talking about the whole industry, somehow we continue to outperform or kind of drift away from the broader consumer sentiment. So just wanted to understand, when you talk to your salespeople, what is working for us and industry at large, which is not visible in any other consumption basket in India?
This has been happening in the paint industry, has been growing at a slightly, different pace than the FMCG category. Probably, few reasons are there, and, those reasons are peculiar to the industry at large. One is that, the urbanization level is still at a low level. It continues irrespective of, what the economic situation is. The urbanization keeps increasing, right? We are currently sitting at about 34%. And if you look at any moderately, advanced country, say China, for example, it's about 60%. If you go to Europe, US, it is about 80-85%. So, as soon as these houses get constructed, they get painted. After every 5 years, they get repainted again. So there is this possibility of advantage of, growth which is available to this particular category. The second is in terms of premiumization also. As the income increases, people tend to move upwards. So that's also helping, in some amount of movement away from the unorganized towards the organized, towards more advanced products is happening. So these two factors, irrespective of what you do, is not true in case of FMCG. The other factor also is that we are slightly underpenetrated. As a category itself, the number of dealers, if you look, there are still places where we are not able to reach. And so we as a company specifically, if you look at it, we have so many areas where we don't have our products available. Though brand is known and, our product is known, we have a very good quality product, but somehow we have not been able to reach those locations. Now, if we increase that reach, we have a chance of, improving our growth rate. So the more we do that, the more we penetrate the market, in a growing market and in under-penetrated, in our case at least, it is, there is a lot of scope for penetration. We see an opportunity for growth for us, irrespective of what the market is behaving like.
Right point. So second question pertains to that only on distribution expansion that you spoke about. So first, what is the annual run rate that we'll target for this year? And second, you mentioned that we had added some 1,300 color bank machine. So just wanted to clarify technicality here. These are always a fresh installment, right? So I'm assuming that yes, some machines that you would have installed 5 years back also must be coming for replacement. So these are fresh installments.
No, these are all fresh replacements, fresh, installations. There is no replacement machine in that. That we handle it separately and we don't count into the new expansion category. These are all new machines which have been put into new counters which were not dealing with us or were dealing with us without machines.
Okay. And so dealer expansion number?
Dealer expansion number will be slightly more than this, so it depends on, how you look at these dealers. So there are retailers or wholesalers or distributors who are there. I'm not counting that, so we will probably be around that 1,300 number only. If you look at the dealer expansion also, because some of the existing dealers also would have taken machines.
Okay. And the last one, on tile adhesive, you said that we are expanding our product range. Just wanted to understand, what is the route to market? Are the same paint dealers are selling tile adhesive, or it requires a different kind of route to market than the usual traditional one?
No, it is some of our paint dealers are also tile dealers, so there might be some overlap there. But basically it has more of tile adhesive distributors who are appointed separately, who cater to this market, but they are into this building material trade. We understand the nature of this business reasonably well, and we have been fairly successful in this category so far.
Okay. So that's all from my side, and all the best for coming quarters.
Thank you.
Thank you. The next question is from the line of Amit Purohit from Elara Capital. Please go ahead.
Yeah, thank you, sir, for the opportunity and congratulations. Sir, on the project side, would you be just wanted to understand, are we cross-leveraging some of the consultancy waterproofing solutions that we have, which is SPL, and is that also helping us to sell our paint products along with that, or that's largely on the industrial side?
Yes. So, there are advantages for us. We are fairly strong in the project segment on the protective coatings area and also a strong presence in the decorative project business. So in the project business where we sell paint, we also push our construction chemical and waterproofing products. And if we get leads of construction chemical and waterproofing, then we push our paint as well into those segments. So it goes into the same area, same builders, same owners, basically, same specifiers. Except that, sometimes for waterproofing, we have to get the specification done separately through consultants, etc., for which we have to have a separate team which works on them and, tries to get our product specified.
Okay. And sir, just on the project side, what would be the salience of project business in our overall business?
I can't hear you, Amit. Can you be a bit louder,
I'm saying what is the salience of project business in our overall sales and it should not include the SPL that we already have, right? Excluding that, what would be the sales?
So there's always been around that, level of 8% to 10%. Okay. For the last 2.5 years, it's been hovering around that, so sometimes it increases, sometimes it goes down, depends on the performance of this category.
And sir, you indicated in the beginning that West and South are the markets where you want to scale up. Is that the market where the project business is slightly over-indexed or under-indexed for us? How do we, above 8% or less than 8%? How do?
Yeah, it is similar, though, in the West and the South, our retail presence is weak, so our projects tend to be, slightly more. So it is slightly over-indexed there. As and when the retail keeps improving and the distribution penetration goes up, it will fall back to the normal levels.
Okay. And sir, one on waterproofing. So we've been expanding into new segments like now tile adhesive as well and grouts as well. So are we now complete range available, or there are some more pockets where you think there will be some more new product launches which will keep happening in the waterproofing space?
Some more product launches are due. We are more or less around, I would say, 70-75% of the products have been introduced. But a few more products are going to get introduced soon to keep completing the range that is required in the marketplace.
Sure. And this should be done over the next 1 year or so, or it should be even?
Yes. In the next 1 year, we should be able to close most of the whatever sells in good quantities, we should be able to launch such products in the market.
Okay. Thank you. Thanks a lot.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Mihir Shah from Nomura. Please go ahead.
Hi, good evening, sir. Thank you for taking my question. And congrats on a good set of results. So first, I wanted to just check with you, on the seasonality impact on the gross margins. If you can just jog our memory, usually exterior paints, which have higher margins, sell more in the first quarter. And during the festive season, usually do we have a higher saliency of more economy paints getting sold, hence the margin can get suppressed, or if you can just, quarter to quarter, if you can highlight how the seasonality moves and remind us, please, sir.
So, typically in the paint industry, the first quarter is good, in terms of the margin. The second quarter has a mix which is more towards enamel, primer, distemper in the first July and half of August sort of a situation, and then it starts improving and moves towards more of emulsions, especially in the month of September when interior emulsions picks up quite a lot, and along with some exteriors as well. It's in the third quarter that it becomes, more oriented towards exterior and interior emulsion. So that is also a very good quarter in terms of margins and profitability. And fourth quarter also, margins are there. The volumes in our case tends to drop because that's the quarter where the South India starts to, dominate overall, and we need to improve our presence there. So the fourth quarter, we have a lesser sale comparatively in that particular quarter compared to some of the other players who have much stronger presence there.
Understood, sir. So keeping this in mind, and you had mentioned last quarter that on an operating margin level, while I understand you again reiterated that on gross margins you will hover around the 38 to 40% mark, and that is well understood. And so on the operating level, I wanted to check. Last time around you highlighted on a steady state it will be around 16 to 17 odd percent. And this time we've done very well. Do you think that we should revisit that guidance, or you think that range still holds up quite well?
No, I think we are, possibly, it will be within that range. We will operate 18%. 18.8 is a bit on the higher side because the raw materials have been relatively very benign. Whether that remains at these levels or not is a question. Sometimes, it's difficult to predict this part. We would prefer to remain at this, hover around this, 16 to 18 is what I had indicated. Probably now it is 17 to 18 where we would be more comfortable. And then that's where we will be in the second quarter and possibly in the third quarter as well. Up to which the visibility is there. After that, it is difficult to call.
Got it, sir. Thank you. That's all from my side, and wishing you all the very best, sir.
Thank you.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Thank you, and over to you all.
Thank you all for joining us, and it was great interacting with you. Hopefully, I've been able to answer most of the questions very transparently and to your satisfaction. Thank you once again for coming to this meeting.
Thank you. On behalf of Emkay Global Financial Services, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.